Hello traders, Gary Wagner here, approximately 10:30 in Honolulu, 4:30 in New York on Wednesday, the 9th day of October 2013. This is the daily report for gold and silver. We have moderate to strongly lower pricing across the board in the precious metals markets, with gold currently trading off roughly $14 on the day, 1304.40. You can see that on the screen. The low has been 1294, 60-minute chart. You can see that right here. And the high, 1324. That would be these prints right up here at the beginning of the trading session, where they just mark it as the start, meaning an overnight trading last night. Silver also trading off, actually trading off almost 2% on the day. Current print 2185, low 2169, and a high of 2249. We'll talk about this towards the end of the show, but on a daily chart, we are seeing a three-river evening star. Again, we'll talk about that towards the end of the show. First chart that we're looking at today is a standard candlestick chart. Spot market in gold, 1304. We saw that the market really dipped strongly as it dipped below 1300. But even with this dramatic drop, the spike drop of about, $14 on the day, it is to be noted that we do have the strength of the US dollar accounting for a vast majority of it. In other words, this is according to the Kitco Gold Index. When they show the last bid, say at 1305, we've got 1304, but when they show it at 1305, they're giving up $5.80, and that's due to a strengthening US dollar, and then normal selling is about $8, so that's where you're getting your net loss of $13 on the day. Now, this is all due to the fact that we had two really major pieces of news come out on day 9 of the partial government shutdown, but we had the release of the FOMC minutes. That's from September. And then we had the announcement that Yellen is going to be nominated, or has been nominated, I should say, by President Obama to be our next Fed chairman, the first woman Fed chairman in U.S. history. Stock market was up, U.S. dollar was stronger. The Fed minutes, basically revealed that they were talking about tapering sooner than later. My sense is they really can't taper. We're not going to see tapering, in my opinion, in October. And December, of course, it will really depend on if the economy's picked up. But I don't see that in our near future. Yellen, although she has been described as one of the more dovish or more work-orientated Fed members, as opposed to someone that is opposed to the current monetary easing program. She's someone that is believed to be accommodating of that program and a natural extension of Ben Bernanke's reign as Fed chairman. Significant pressure in the precious metals markets, no doubt about that. Currently, we're looking at just $1,300 gold. You can also see, as we saw this market trade lower today, this dip, this spike, and on a 480-minute chart, when we go ahead and blow this candle up, we're really getting a doji candle, meaning the open and close being very, very close to each other. And look at the length of this line. So it's a long-legged doji, and it is an important candlestick itself, and it also depends on where it's found. But again, we're looking at a 480-minute chart. Most importantly, when we take a look at this chart, I've got one simple fib retracement that we have put into this chart itself, and that's from, of course, 1180 up to 1430 and change. We have identified some key areas, and one of them that we've talked about has been this $1,300 mark. You can see that, in effect, we have a close or a fix right now. This is the close because we are looking at our continuous contract of COMEX gold right here. So we're looking at a market that virtually closed right at support after dipping below there. We're still looking at major support at about 1275. That's a 61% retracement. We are still looking at resistance sitting at around 1335, 1330 to 1335. with a little spike above that. And the spike above that I'm talking about is this shooting star that we got on this short-term chart right in here, in which we saw the market test or go up to almost the 1350 area. Of course, above that is 1370, 1373, but this particular resistance line is absolutely out of play at this moment. And in fact, the only real resistance that we have in the market is going to be roughly at the 1330 area. I'm more concerned right now, quite honestly, about support, because in light of the news that we got and the way that the market reacted, we did have the stock market move up a little bit finally after seeing it down day after day. But we are seeing this kind of pressure, and we illustrated that a lot of it has to do with dollar strength, but there's still selling going on in the market in light of a nomination that's construed by analysts at large as being one of the more dovish of the Fed members, and should have no trouble, I believe, being nominated to the Fed chairman post. So does this alter or change in any way our longer-term outlook or prognosis of the market? I have to say no at this point, because what we are looking at, in my belief right now, is this really beginning of a fifth wave in a bear count, and that fifth wave in a bear count, I believe at least, could come in and test 1275. We remain under pressure. We have dipped below but closed above really 1300, but as you know from my daily reports, I show a support band starting at around 1304 to about 1308. It's not an isolated or an exact number. I always believe that support and resistance levels are a band in which a small defined area in which you'll find support and resistance. But if we look at this just simply from a daily chart perspective, we have this defined downtrend. We can see that we've had these series of lower highs. We also talked about the fact that we have a fairly flat bottom, unlike silver. Silver had showed a real nice spike up, but we'll take a look at that. A lot of that good work has kind of been destroyed just in the last day. But we are quickly approaching what I believe will be the apex or the terminating point. And at that point, we should see the market break and release energy. And when I say release energy, I mean you'll get a quick spike up or a quick spike down. My belief right now is it's probably going to be a spike down and test this area of 1274, but I am looking for a potential bottom in the market at some point in the near future. Now, we still have the crisis going on. There's been nothing resolved in Washington. We're on day 9 with only 8 days before the government runs out of money. They seem to be locked in a stalemate, and only the major players know whether or not they're going to shake from their unmovable position, because you have two heads of the government and they both have positions that are diametrically opposed, and they are both not willing to compromise. Incredible stalemate. We'll see how that unfolds. But as we're all aware of, that time limit continues to shorten day by day. Now we're looking at a daily chart, continuous contracts in the silver market. Talked about this a little bit yesterday, and what I saw setting up was the potential of the MACD to begin to cross. Of course, we had a dramatically lower close today. Market off about 50 cents plus on the day. Daily charts, Japanese average format. You really can't see the kind of damage that was inflicted in this chart on this type of chart. Really what we would need to do, of course, is to remove the Japanese average as a study so we can go to straight candlesticks. And as we talked about at the beginning of the show, we are looking at, in terms of a 3-day pattern, of a 3-river evening star in silver. First definition, it's after a defined uptrend. Well, we are looking from the market going from about 2050 up past 22, so the market has moved substantially to the upside. You get a large green candle, a star gapped above it, and then a red candle following it. Of course, to take this as a candlestick call, you would need to get confirmation, and confirmation would be on the following day. You would get a red candle with a lower low and a lower high, it would look something like this. So you would get a continuation of that downtrend. As I said, one day doesn't really change things dramatically, but there was some real damage that was done on the chart as we've given away this territory. Now, support, I still have to look at support at 2146, 61% retracement. We have a long history recently through September where you can see that the real bodies, and this again is a genuine candlestick chart, so we are looking at real bodies, but the real open and close consistently traded above that price point. You did dip into that right here, and then the following day it closed above it right here and has remained above this price point up until this point, including today. So if we were to see a continuation of this market under pressure and at the same time a break below 2143, which isn't all that far away, that would signal the potential for the market to sell pretty dramatically, and our next target area would have to be 2056, and that of course is the 76% retracement level. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.